Hey everyone, Kyle here, and in this video I'm going to be talking about the KPIs to make your SaaS an investable business. So really these KPIs are extremely important to get investors to invest into your business and to get additional rounds of funding for your SaaS. So I'm taking this directly from a really popular SaaS investor called David Sachs. And these are the metrics which I could go through each of these so you guys can understand how to make your SaaS investable. So the first thing is growth. So this one should be obvious. Revenue growth. If you had $100,000 in revenue last year, you need to be growing at 3x. So that would be $300,000 in revenue. And this is metrics for a great business. The next one is gross margins. So obviously if you're selling a SaaS that just uses compute power and database power and stuff like that, and it's not very intensive, it's really easy to have these high gross margins. If you're selling something like physical computer storage, these gross margins are tougher to have, but essentially it is product costs minus expenses to sell your product. Next one is super important, and this is net dollar retention. So what this essentially means is say you sign someone onto your SaaS for $1,000 a year. Do they eventually, by the year's end up upselling to either more seats or more usage? You want to make sure that you have a good net dollar retention and people aren't churning. If you're getting a bunch of churn and 50% of people are leaving, it's going to be hard to have this 140% net dollar retention. But really what this is like I said, if you're signing someone for $1,000, you want them to be at least $1,400 by the time they renew the contract next year. So everyone is growing, using the product more. And this is showing really good signs that people are liking the product and growing with the product. The next one is your CAC payback period. So there is going to be cost to market your business and then ultimately turn those leads into sales. Do you have a 6 to 12 month payback period? That means, are you spending $24,000 to get a $1,000 customer? You'd be at 24 months. But if you're spending $12,000 to $6,000 to get a $1,000 a month customer, that means your CAC payback is 6 to 12 months. And then finally, the last one is your burn multiple. So this essentially means if you're burning $100,000 a month, are you adding $100,000 in revenue extra per month? So this is, all these SaaS companies obviously burn money. If you have a CAC payback period like this, you're going to have to spend money to make money. So are you burning one or less, which essentially, like I said, if you're burning $100,000 a month, but you're adding $100,000 in revenue, you have a 1 burn multiple. If you're burning $200,000 and only adding an additional $100,000 a month in revenue, you have around a 2 burn multiple. So these are really the 5 most important metrics to make your SaaS investable. If you have all these metrics in this gray column, it's probably going to be super easy to raise capital for your business. But if you don't have these and you only have a few of these, it's probably going to be pretty tough, just so you guys know. And really these metrics change quite a bit with interest rates. So when interest rates are super low, it's going to be a lot easier to raise capital for your business because obviously it's much more abundant. But in 2023, with the higher interest rates, it's going to be a little bit tougher. So these numbers might even get worse if interest rates rise even more. If not, and we go back down and lower interest rates, some of these numbers might get a little bit easier. And there might be a lot of companies that are getting funded even in this good. And with tech, the way it's been, even in these danger zones for super hot startups like AI, crypto, stuff like that. But just think about all these numbers when you're growing your SaaS business to make sure you're optimizing all of these different parts and making it an investable business. So hope you guys enjoyed this. If you guys want more SaaS content, go ahead and subscribe down below.